All right, but here's 1 minute MES. Seems if we try and use Thursdays, such again, it's so aberrant of what typically happens. That's going to be tougher to use. So I'm just going to go to Friday here, and we'll just use from the, well, of course, coming into it, right? Break a structure, retrace, break, retrace, break, retrace, break, retrace. Here's a good example of going all the way right to the pivot. So here's the low that leads to the break of structure. I get the change of character here, so I come all the way back. Now, if your stop is at the high, well, they wicked you, right? If you're 2 ticks beyond it, you got spared. But really, you're kind of in the early slop here. You're in this first half an hour, but the trade is there. The pattern is there. Break. Here's the low. We break. We retrace. We come all the way back to that high, right? And we triple top there. Right, ends up being the IB high, right? No surprise. And then, right, so if you were looking here, all right, if you took it somewhere up in here, maybe you got dinged. Right? There wasn't anything really there just screaming, oh, that's the perfect spot. Although if you were trading this way, right, looking for it right there, right, well, maybe you took a stop there. Right? I'm not trying to tell you that every one of these is going to be a winner, of course, right? Then you turn and run, right? Don't listen. If anybody ever tells you that, they're looking to get into your wallet. Let's get that off of there. Okay, right. So that's a loser. Well, what happens next? Break a shift in market structure. What am I anticipating after that? Let's use it this way, right? Again, I don't want to offend your intelligence, right? But just to make sure everybody gets it, right? So what's here, right? Big imbalance, right? Boom. Right now I'm on the 1 minute here. Big imbalance here. What am I looking for? I'm looking for a retrace to come into the discount zone. Oh, here we can do this. All right, well, here's where the premium zone starts. Now I'm going in and to and through. I'm going all the way 7, 8, 6, and even getting a wick through that because I'm mitigating. Well, price action here is mitigating this imbalance. Right now I've got an order block up at the top. Right, that's a rally-based drop. Right, so I'm coming into. So I know this is a good supply zone up here because of the fair value gap that came off of it. Right, so I only want to look for. I only trade off of supply and demand or order blocks here that have a fair value gap that follows it. And I would encourage you to be that picky about the supply and demand zones or order blocks, whatever you like to call them. Make sure there's an imbalance that came off of it, right? So I know I have a good one here. So I'm coming up here. I don't quite get into the order block here, but I come into that fair value gap. Now I'm coming down. Now maybe you didn't get that, or maybe you took a stop there, right? So maybe you're like, boy, these are deep retracements here. Now, given the volatility that we had last week, that shouldn't be terribly surprising. But nonetheless, right? We can look here, and so would the trade have worked here? Yes. Yeah, so do I know my trend yet? Well, at the moment, I'm in a downtrend. Even though the raging uptrend coming into it, now I've had a shift in market structure. Right, so you can't hang on to that. Well, it was bullish all morning, it was bullish all day yesterday, so I'm going to hang on to my bullish bias. Now, if you don't have that screaming at you, that nice, well, in my case, I use these colors, this bright, what is that, magenta in your face going, hey, there's been a shift in the market structure, dummy. That's me talking to me, right? So hey, why are you trying to buy it? You've had a shift in market structure. What are you waiting for? A retrace for what? A sell. It's a little sloppy here, right? I could make a case here. You could do it again, but well, let's just stick with the major breaks, right? So here's the next major break right here after this one. So we are still in a downtrend. Look at the McGinley. Right, that often, right, it's easy to go eye blind to it. You're like, oh yeah, the McGinley. What color is it? Where's price action relative to it? Right, until it gets on the other side of it, right, downtrend. What are the breaks of structure telling you? Downtrend. Why would you be looking to buy, right? But that's what so many people do, right? Anytime there's a trade here, somebody's buying it. Why are they trying to buy it? Because they're paying attention to this. They're not paying attention to the fact that we've had a shift in market structure and we're now in a downtrend. Now, if I go over and look at the 4 hour, are we in a downtrend? Well, probably not. But on the 1 minute, we're in a very substantial downtrend. So let's just work through it, right? So here's the next break of structure. What am I anticipating after that? Right? Again, not to be obnoxiously redundant here, but as I start this retracement here, it doesn't get there, right? So miss, right? That doesn't create the opportunity. Now I get another break of structure here. That's a pretty good retracement. What do? Right to the IB low. Okay, right. If you've studied, some of the material that we've been teaching for years, the IBs are is, I would propose to you, the two most important levels on the board every day, never, without fail, right? I don't, nothing more important than VWAP, more important than anything. IB highs and lows, right? We just right in your face, right here. All right, so we retrace right to the IB low, right? That's now, since it's been broken, it's natural resistance from below. We come back to it. Now, if I'm looking, here's the break. Here's the high that led to this break, right? Do I have a 50? Doesn't look like I got there, right? If I'm here, oh, leaves me hanging, right? So judgment call there, right? So that, you know, I've traded enough with the IB to know I'd have been looking here, but you know, that's hindsight trading, right? So we won't count that one. So here's the next break of structure right here. What happens after that? Now let's look here, right? So here's the next break of structure. Oh, here. Okay, all right, let's get that off of there. Right, do we see it? Sometimes I think I need to draw this so you see it. So here's the swing, right? Here's the swing high, right? You see the fractal pivot right there. So we know this is a good high. Leads to this break of structure. It goes down here. Now we haven't had this break of structure here. I start the retrace. What do? Right to the golden zone. Now look where I am, right? Golden zone underneath the McGinley. I'm in the golden zone. Do I want to take that trade? Yeah, you do, right? You're in line with it. So you would have an understanding by having looked at the 4 hour and the 15-minute that the market is in an uptrend. But as we sit here in the middle of this correction of that uptrend, if we were to look at a 4 hour or a 1 hour or a 15-minute, this is corrective action in a larger time frame uptrend. But that doesn't make that trade any less perfect, any less beautiful. Break of structure, it always comes back to break of structure, retrace. Break of structure, retrace. Now, does it get into the premium? Does it get into the you know, if you want to use the SMC language, do we get into is the PDA here? Are we getting into the premium for the trade? Because where's my stop going to be? Well, again, that's a function of what kind of size you're trading, and are you trading micros, full size, NQ, crude? What are you trading here? That distance here, if this is going to be your stop, well, you got to make that call, right, relative to your risk tolerance here. If I'm trading micros, I'm going to put my stop right there, right, and I may be adding as we go. I trade the micros a lot, right? I always have open the ES and the MES because there are times where it's much easier to let something run in micros than it is in the MES. Right? I would imagine many of you have had a similar experience. Okay, so just carrying on here, right? Break of structure. Okay, here's the high that leads to that break of structure. Do I get a retrace? I don't get a retrace. I just get another break. Well, here's the retrace actually here, right? So that would be far from 50. But note what it does. It's going into a fair value gap, into an imbalance. Now, right, we get break. Again, you can't make this up. So we come down here. I get a retrace. Here's the break that leads to, here's the pivot that leads to this break of structure. What am I anticipating now? I'm anticipating retrace, and there's no reason at this point to think that trend doesn't continue until I get the change of character here. Now I've taken out that swing high. So here it is, that, you know, as we just went through in line drawings. Here's the change of character. We get to and through this fair value gap, this imbalance here, and now this shift in market structure hasn't happened yet. We start the retrace. Well, it doesn't look like we get there from the absolute low. All right, so there's one, leaves you hanging. All right, get you off of there, right? So we don't quite make the 50. We don't make the discount. Now, in hindsight, you might look at that and say, "Oh yeah, I would have taken that." I wouldn't have. Right? I've been down here waiting, right? Waiting for, come on, give it to me. Doesn't happen, right? So then again, discipline. Trust me, over time, right? You don't want to chase every one of these. Let it set up, right? So you get into that premium. So what's the next thing that happens, right? You're like, oh shoot, oh, that would have been a nice one if I'd got that. What a perfect setup for the low, right? Break. You know, here's the sweep, here's the break, here's the entry. Oh, not far enough. Well, slow down. What happens next? Another break of structure. After the break of structure, right, again, I do this to try and drill it into your head. What am I waiting for? Retrace. What do I get there? A little change of character. Right. So now I'm thinking, oh, I've had a break of structure, retrace. Well, I've got a new PDA right here now. I think you all can see where I'm going here. Oh, that one would have been tricky. All right, so we get a little wiki here. Bring you down there. All right, so it gets a little wiki here. Right, this possibly it took a stop there. You had another shot at it right here. It's, kind of a judgment call. But the broader point being, I got the break of structure. I got the retrace. Am I in the discount for the proposed buy? Yes, I am. Would you have gotten this? Maybe you took the 50 and it rolled over. You got stopped out. Can you go again? Right when it comes back to the tap the golden zone. Now you may not have here because note right. That's what's one of the things I like about our McGinley is I've got a squeeze going on here. So do I want this? Do I want to be making these entries in the middle of a squeeze? Maybe not. Maybe not. Maybe that's just enough to have you go. I'm going to wait till we see which way we're coming out of that squeeze. But is the pattern there for you? So break a structure, retrace. Up you go. So, we can keep going here, and then I'll wrap it up here. I think you're getting the point. Because the real value isn't watching me do it. The real value is you doing it yourself. Right? Again, if you don't have this indicator, maybe you trial it, right, and then work through this process, see how that works for you. Break of structure. Well, let's see. Break of structure, retraced. Looks like that wouldn't get there. Break of structure, not going to get to the. Well, that might have. No, maybe not. Let's just take a peek. If you'd had one here, you would, but you probably would actually. Right. So here's the break of structure, retrace right to the 50. There's the 50. Up we go. Just shy of getting to your target. Let's get that out of there. What's the next thing that happens? Oh, change of character. So I've got a new high here in this uptrend with that break of market structure. Now I come back down. What happens here? Change of character. So there's the pattern here. Right? We talked about this. We get up here. Now we get a break. Where's the trade? Right there. Right? This is the trade. Now, if I put this, so maybe I can do it. And here, I'll draw it. That might be a perfect fit. Right? So here's the change of character. Here's the new high. Here, continuing the uptrend here. Change of character. Coming back. Let's see what we have here. Right? So I've got an imbalance here. It's coming back. It's wrestling with that imbalance. Then I roll over and now I get a change of character. So here it is again. Come here, here, here. Right now, the algos will stay with it unless there's a close above that 65. So that's judgment call. It's tricky, right? You might have gotten wicked there if you're too tight on that stop. Ideally, your stop would be right here or secondary pivot, right? But that's a little bit of hindsight. So, you have to decide for yourself. If you're doing this kind of back testing here on the fly, would you have stayed with it? Maybe, maybe not, right? You had another shot at it here if you weren't sure, but then you get here's the imbalance. Okay, well let's stay with it. What happens after this shift in market structure? Let me get that off of there. Here's the shift in market structure, right? So, wait, what am I looking for? I'm waiting for a retrace. I come back here now, back into the fair value gap. Gets a little bit wicks get on the other side of it here, but body holds it. Now we're coming back down. I get a change of character here. Right, so now I'm getting towards the end of the day. Well, no, we're not. We're getting into the noon hour here. So it's a little bit choppy here. Judgment call. This is not your middle of the lunch hour. Often this is not a great time to be trading, particularly on a Friday. But if the entry model is consistent and effective, you make the case it wouldn't matter. Here's a break of structure, so we get break, but we get multiple changes of character. But no, we're in this long squeeze and we're in the lunch hour, so this is not an ideal time to be trading. Not to hindsight it, but it is. It's lunch hour right now. We're coming at 1:30. We start to come out of that lunch hour. What do? Right to the IB low again. Tickling from the other side, can't get in, right? If they can get back in, good chance they get to VWAP, but they are rejected, right? So algos are going to keep them out. So here we start again, right? From the pivot high here. So here's the change of character. So we get multiple changes of character. So when you're in that situation, you kind of got to wait for this thing to resolve. Now look what's going on, right? We're in the middle of a squeeze. So do you want to be trading during that squeeze? Well, we get a pretty nice looking downtrend once we come out of that trend. One out of that squeeze. Now look at the McGinley, right? So squeeze, McGinley, the color of the McGinley, the slope of the McGinley, where price is relative to the McGinley coming out of a squeeze should be a tell, right? So then this whole process starts again. So I get here, we come down here, change of character, retrace. If I turn these on, you're going to see how many of these we get here just to save time. Break, change of character, retrace to 50. Here's the target. shift in market structure, retrace fair value gap, comes back down, we get second target here. Come back, here's the McGinley. I go right to the 50, right? So here's the shift in market structure. Maybe it's easier if I do this, right? Because again, I want you to do the same thing. We come back here, right? Don't quite make the imbalance here, but it's already been mitigated. We come right to the 50, here's the target down here. What's the next thing we get? Break of market structure, retrace. Right, fair value gap, break of market structure, very, very shallow retrace. Here's the last break of structure. Whoa, that's going pretty good. Whoa, we're coming back, change of character and break of market structure. Okay, so at that point in time, what are you thinking? Hey, looks like I've got a change of trend. Right, so here's the first indication. If I open that up, you'll see that is the shift in market structure. So here's the last break of market structure, and I get a change of character and then a shift in market structure. So I've gone from bear to bull, at least temporarily here on this 1 minute chart. What's the next thing that happens? Right, from this low, here's the break of structure. I retrace, look at this. This is to the tick, right? There's the golden zone. Now we are in a squeeze, right? So your call as to whether or not you're comfortable trading that. We're getting into the tail end of the day on Friday. You know, maybe you're trading, maybe you're not. But the price action pattern here stays consistent. What do I get here? Right, well, there's the target, right? So this golden zone gets right to target. Leads to a break of structure. This case, I get a break of structure, retrace right to a fair value gap, new high. Now I'm coming down here, right? Change of character, right? That little pivot breaks, right? I come all the way down to a major, retrace, right? I come down here. So, if I pull from here, doesn't make target. Right, we come right back here. So here's the imbalance. Pardon me, that's not a fair value gap. So we swing, retrace, we go right to the golden zone, come down, it leaves you hanging on the target. You can kind of hypothesize what happened down here, right? This swing low gets grabbed, right, for the push up here for the last little pump, right? So this is just baiting breakout traders, right? It happens all day long, every day. Swing, retrace to the 50. Here's the change of character. Are we going up now? I've come back down, right, as we end the day here. Here's the last change of character, and then now we end the day, right? So I could walk you through 200 days of this, which would be tedious for both of us. The point is not me doing it. The point is you doing it, right? Because that's where it's going to solidify in your mind. Right, so I can just show it to you here and take you through. It wouldn't matter what day I picked. I just didn't use Thursday because it went vertical, right? There were no retracements. But as we look at the remainder of the week, with the exception of that massive day here down to the 1 minute, I'm getting uptrend, downtrend, uptrend, downtrend, uptrend, downtrend, uptrend, downtrend, uptrend. On a 1 minute, right, it's all day long. You're switching back and forth at this degree. The other discipline that you can bring into this is waiting, so that you're only taking, if the 15 minute or the 4 hour, right, which is not going to change as much. If the 15 minute is bearish, well, perhaps you only want to look for bearish trades on this side, right? So you can get in alignment with 1 degree higher and down to the 1 minute. So up from the 1 minute, I'd look at the 15. Up from the 15, I'd look at the 4 hour. Right, now that's, you might do the 30-second, the 1 hour, and the daily, right? There is no magic combination here. This is what I use, and it's not uncommon to be using those time frames. But we look here at the 15 minute, right, as we did earlier. After that break of structure, we'll hear this change of character. Well, what's our trend right now? Trend is still up, right? You can see this is our indicator's always going to tell you the trend based on the last major break of structure, right? So even though we've come down here, we've had this deep retracement, the trend is still up. Trend is still up because we haven't broken this low, which led to the break of structure. So you might say to yourself, okay, well, if the 15 minutes is still in an uptrend, this is where you got to make a decision, right? We're still in an uptrend, so we're not going to trade any of that. That's one possibility, right? You say, until I'm in a downtrend, I'm not taking any shorts. Well, where's the money made today on the smaller time frames? Likely, a little combination of both. But certainly there was plenty of opportunity on the short side, as we see here and as we saw here. Plenty of opportunity through all of this by just focusing on this price pattern. Again, you call it the 1062 is what I call it, right? The breaking and entering. You want to call it the King's Crown. If there's a trend line, King's Crown, you can call it a head and shoulders. You can call it a chuck flip. What you call it doesn't matter. I just like the 1062. That's how I remember it, right? Break and enter, break and enter, break and enter. Okay, guys, hopefully that gives you a few things to think about and do some testing yourself. I strongly, did I say strongly? Encourage you to do it yourself, right? Watching me do it, watching someone else do it, nowhere near as impactful as you go into your chart and say, okay, break, retrace. Oh, look at that, break, retrace. Oh, break, right? Go across multiple assets, multiple time frames. It won't matter. Does not matter what time frame, right? You get down to a 5 second, you see the same thing, right? Time and price fractal. So have at that. Again, if you don't have some of these indicators, try them. Let's see what you think. See if you think this is going to help you. Okay, guys, with that, I'll wish you a good weekend, and we'll catch you next time.